Hey guys, Boris with BK Forex. Welcome to our weekly technicals for January 2nd to January 6th of 2017. Can the dollar rally extend for euro dollar, dollar yen, and pound dollar? And I think the interesting thing of this Christmas holiday week has been the stall in a dollar rally. If you look at everything technically, there's clear indications that the dollar is kind of rolling over on the yen, it's rolling over on the euro. The pound is a completely different story. We'll talk about that in just a minute. But as we open up the new year and everybody straggles back from the holidays, we fall right into a huge calendar event. We have the non-farm payrolls, we have ISMs, we have UK data. There's just a slew of data coming at the dollar. And it'll be interesting to see if the positive economic data actually can extend the rally, given the huge amount of movement we've already had. The very interesting thing is if we have, let's say, relatively strong US data and the dollar fails to make fresh highs, that should be an incredibly strong signal that we are ready for a correction. All this week we've been flirting around with the correction pretty much in the dollar pair, especially in the euro dollar and dollar yen, but haven't really had a full-on sell-off just yet. Negative news next week, or any kind of a disappointment on news next week, certainly could be the trigger for that. It's all really going to be contingent on where U.S. yields are. 10-year slip below the 250 level today. That was a big barrier. And if we start to slide back towards the 240, certainly the dollar is going to come in for some profit taking as the week continues. So far right now, the range is relatively, pretty much relatively the same. Euro dollar still has that big resistance to the 105.50. It still has a lot of support at 103.50. Dollar yen, sort of a very wide 115, 120 range. Although the 115 area is one that I think is going to be the key support. If we do have a corrective move, that's going to be the big magnet that everybody's going to be arching for on the short side. Pound itself is a completely different story. The Brexit overhang on the pound is really starting to affect it. UK yields have just been compressing continuously. They're down 6 basis points just today. This is Thursday as I'm recording this. And it's very much emblematic of the fact that I think the market is starting to really begin to worry about the impact of hard Brexit on UK economy. We're going to get the PMI services this week. That's going to be a very interesting look into the true strength of the UK economy. Because remember, for a while now, we had sort of a beneficial virtuous cycle where lower currency rates and staying in the same market was actually providing some nice support for the UK economy. Last month was the first clear sign of worry, where the lower currency rates just really did not provide any kind of a boost for growth. If we have disappointing data out of PMI services, it's going to push pound lower. Pound is very vulnerable at this point. This 122 is very vulnerable, and certainly the 120 flash crash lows are going to be very vulnerable. Let's take a look at the charts here and just see how everything sets up. So if we're looking at the euro, I think the clear evidence on the technical side is this 104, 103.50 level, double bottom tested. So far looks relatively good. The 105 very likely could be popped into the Friday close as I'm recording this just a little bit earlier, sort of beginning of the new year. Above that, of course, the 106 is a big overhead. The 105.50, 106 is the big overhead. That was the big trough from which we fell towards the 104, 103 area here. A short squeeze certainly could take us towards the 107, 108. That would be the very powerful short squeeze, and I think that could surprise a lot of people here. Although this clearly looks very long-term bearish, technically, on the short term, what you're seeing is a loss of downside momentum, a turn to the upside, and in fact, even a minor higher low here, something that I really like to see technically as a bullish formation. So the risk reward to me feels like you really want to get long euros here, possibly maybe for 105.50, 106, and for a surprise short squeeze, which very few people in the market would expect, certainly could take us to 107 as the week progresses. That could be really the interesting trade of the week as we come into the fresh new year. Dollar yen, similar story from the opposite side. So we've had a lot of distribution here. We basically made highs about 2 weeks ago. What is it? What date is this? Yeah, 2 weeks ago. And we haven't been able to breach those highs for 2 weeks. That's been distributing for 2 weeks. Now, in bullish markets, the distribution usually means just simply consolidation and then a breakthrough, towards the fresh highs. But really, honestly, and I think this is a sort of an interesting takeaway from all of this. You can't buy this until and unless it makes fresh highs. I think the the way this is setting up right now is with 1865 being the high, it needs to break this 1865 to kind of confirm that 120 goes and becomes a real viability in its path. Right now, the path of resistance seems to be towards the 115, and certainly, like with a stop of maybe 1875, maybe 1900, if you just wanted to sort of protect yourself, it's reasonable to try to sell this correction, even if there's a small amount of rally against it, because the possibility of us coming back towards the 115 seems much more probable right now. This would be sort of a flag formation that distributes a lot of the move. Again, the fact that we haven't made fresh highs in 2 weeks suggests momentum to the upside is over, and we need to see some deceleration. Yen has this very strong tendency, to go up like a staircase and drop like an elevator. So the correction could be swift and very sudden and very effective. So I really like this trade to the downside, and that's what I'll be watching for as the week begins for the fresh new year 2017. Wish you best of luck, the best of trading.